Hey, my name is James Nicholson and welcome to my property channel. Now, this channel is all about my investing journey and we're taking you along with us to see all the good, the bad of property deals and investing. So we're going to show you all the behind the scenes. Now, you can already see some of the deals that I've recently done, but more interestingly, I'm currently building a portfolio for my two daughters. We've got Georgia, who's 21. We've just bought our first property in Doncaster. We've completed on that, and the video before this is showing you around all of the work that we did there. And we're building a portfolio for my new baby, Amelie, who is just one. So how can you join us on the journey? Very quickly, take that finger up out, spin it around, smash that subscribe button over there. Go on, it'll take you 2 seconds. Smash that subscribe button, hit the bell, and then you'll see all the wonderful videos that we got. Now, today's video comes from a question or a comment on another YouTube video, and you should be commenting too, because if I see questions that are really good, then I'll make a video specifically to answer your question. Now, this question came from a video that was all about releasing equity in your properties to buy future properties, and the question was, do you pay tax when you release equity? And that's a very, very good question. It's a smart question that maybe some people assume that you do pay tax, or maybe people assume that you don't. Let's not just assume, let's get down to the facts. Well, here's the thing. You don't pay tax when you release equity. So it's a very powerful way of getting large sums of money that you can use for future investment. So I purchased my first property for £45,000 in Dorking in Surrey for a studio flat. That was then turned into around £100,000, and then I did an equity release. Now, how does that work? What I did was I went to my mortgage broker and I said, look, the value's gone up. I want to put it on a new mortgage. And they looked at what loans options I had there, and you can borrow 75% of the value of that house. Now, I'd had initially a repayment mortgage and I'd put a deposit in, so I probably owed about 30 grand to the bank. Now the house is worth 100, or a flat is worth 100 grand. I'm able to pull out 75 grand, or I can get a 75 grand loan. Now I've got to pay the 30 back that I owe the bank. That leaves me with a pot of around 45. That money was used to purchase a new buy-to-let property, which was a flat in Hastings in Sussex. And so that worked very well. Then what happened was the house went up again. And so when the house then went up a few years later, I did another equity release and I used that to buy a house in Hastings. Now, you don't pay tax on this because it's borrowing, right? It's borrowing, and so eventually you're going to have to pay it back, but that's fine. I'm actually going to make a video on what happens at the end of an interest-only mortgage, so do check out for that in the next few days. And so, yeah, you will be borrowing the money, so you don't have to pay tax on it. So I've just recently released £100,000 from a property, and I'm using that £100,000 to buy other assets at the moment. Now think about that. If you were to earn £100,000, if you were in a job, you would have probably had to earn £200,000 because you'd have paid more than 50% tax on that, right? So you'd have had to earn double to be able to get yourself on that £100,000. Or maybe if you're a business owner like me, yeah, you pay less tax because you pay 20% corporation tax, but it's not just that. You would have had to pay VAT, yeah, you'd have had to pay other costs in that business. And so borrowing money, releasing equity is the most efficient way to get big lumpy sums of cash that you can do deals with. Now, property, normally, if you buy in the right area, and it's not every area, because I know in the comments I've seen some people say, well, it didn't happen in this place, but the majority of the UK, the prices will double every 10 years, right? There are little pockets where it doesn't, and so when you buy, you need to make sure have the prices been going up in that area for like a 20-30 year period. If they have, then you're pretty good. And so historically, prices double every 10 years. So if you buy something today for 100 grand, I've just bought 60 grand house, but it's now worth 100 because we've renovated it. So I've got a 100 grand house in Doncaster. In 2032, should be worth £200,000. Now, I'll then be able to release some equity from that to then buy another property or another 2 properties potentially in that area. And that's one way to grow my portfolio even bigger. So it was a great question. Do you pay tax when you release equity? The answer is no. Now, I'd love you to go and check out all the other videos on this channel. One that's really useful for you, which I'll pin in the comments here, is how I bought my latest project at auction. There's nothing like that on YouTube. It's a really, you're watching my screen as I actually buy my last project. So I'd really like you to see how that works. And also give this video a quick like. It'll take you 2 seconds. That'll help me with YouTube. And in the comments as well, no, not in the comments, in the description, I'm going to put a link so you can join our Property Accelerator Facebook community. I'm James. Do check out all my other videos, including this one right here. Bye for now.